Hello and welcome back to the channel. In this edition, I'll be presenting a peer comparison of three shipbuilding defense stocks. So these defense stocks have been in prime focus because of not only the return that they've generated, but also a lot of order book that they are getting. So a lot of focus of the government is in increasing defense spend, and a lot of news is around Defense Acquisition Council giving out a lot of orders to not only aircraft manufacturers, which helicopters and fighter jets like Tejas is in prime news, but also for submarines and corvettes and the aircraft carriers. So the aircraft carrier, one of the aircraft carrier recently got launched, and there's a lot of focus and there's a lot of conversation and chatter around India's rising defense prowess. And here within this image, what we see is we see a comparison between what the naval strength of China, India, and the US stand at. Now, we know that these three by 2030 are going to be the top three economies of the world. Now, the prime focus of the economies, the top three economies, would be to ensure that the maritime trade happens in a very smooth manner. And if you hear to a lot of chatter that is happening around geopolitics, you would realize that Navy plays a very important role in not only the defense prowess of a country, but also in ensuring that the maritime trade happens smoothly. Hence, India, I feel, is not only becoming a global center for repair and overhaul facilities. So recently, I think the US Navy signed a contract with one of the docks for repair and overhaul. And this trend, feel, is going to keep continuing. Also, the ports, the commercial ports in itself is seeing a massive push by Adani Group and enterprises. But I would like to focus on companies or defense companies where the entrepreneur is not a question mark. So while investing into stocks, I think we often tend to ignore who is leading or who is at the helm of affairs, and we constantly go by a quantitative analysis and we leave it at there. But I feel qualitative and quantitative analysis need to be blended together, and we really need to understand who is the CEO or who's the chairman and what is his integrity. So I'm not questioning the integrity of the Adani group of companies, but the news and the chatter around the Adani group of companies, and oftentimes we know that there is no smoke without fire. So so I would like to reduce my risk, right? Coming back to the topic, I think here within this chart or within this table, you can see the India's naval strength does not match up to China and the US, and it will take still some time. It will take close to 10 to 15 years to even reach maybe close to 50 to 60% of the naval strength that China and the US have. So there's a lot of catching up to do. And this catching up and this insecurity about the defense being insufficient leads to a lot of opportunity in terms of creating wealth, I feel, because the stocks that are listed in the shipbuilding space, which is GRSE and Mazagaon Dock and Cochin Shipyards, these have run up, and these have run up quite a lot, right? So I will show the price action for all the three, and you will see that these have gone up by 10 times in the last 2 to 3 years, right? And the question arises, where does it go from here? Oftentimes we feel that it's gone up 10 times, so it's expensive. I feel it is expensive. So we are not here to feel, we are not here to go by our feelings or emotions. We need to look at it objectively. We need to look at the facts and then take a call. Because oftentimes within the stock market, I think a lot of times I hear people and I see them making calls based on what they feel. Be- because what you feel may not always be correct. And you have to go by the data and you have to go by the qualitative analysis, and you have to reduce a probability of making a loss, right? And you have to increase your probability of making a profit, and you need to go and process a lot of data to do that. And that's why I tell retail investors that they're better off looking at the index where they do not have to use their brains and do not have to scour on a lot of information to make a decision on whether to buy or sell when to sell, and those kind of things. So here within this graph, we see that the corvettes, India is sitting at 18, whereas China is sitting at 77 and 22. So there's a huge gap here. Aircraft carrier wise as well, we do not have nuclear enabled submarines. So nuclear enabled submarines and submarines which run on fuel are two different proponents altogether. Developed economies have nuclear um, run submarines. So what it enables the submarines to do is it enables submarines to stay submerged under the water for a very long time. India currently does not have that. So there is a lot of not only a technology prowess that is required, but even quantitatively, you require a lot of quantity. And sometimes within a war, a huge quantity becomes a quality. That is also a case. So there needs to be an incremental quantity, and also there needs to be technological improvement as well in a lot of spheres, in a lot of fields. So this is an opportunity according to me, and this is something which needs to be explored. So coming back to the peer comparison, so these are the three companies that I'm talking about. So at one end we have Mazagaon Dock, which has a market cap of close to 91,000 crore, right? Is the largest out of the three, Mazagaon Dock. And Cochin Shipyard has a market cap of 41,000, and Garden Reach has a market cap of 20,000 crore. Now, if you talk about the order book and the latest order book that we have, for Mazagaon Dock, we have an order book of 40,000 crore. So basically, the market cap or the valuation of the company is double of what the order book is for Mazagaon Dock, right? For Garden Reach Shipbuilders, we have a market cap of 20,000 crore, but we have an order book of 25,000 crore. So the order book is more than what the valuation of the company is. So welcome to India. You have a stock which has run up 10 times. So if you look at the price action for Garden Reach, right? Here you will see, um, here you will see that the stock was sitting close to, so let's go further back. Let's go 3 years back, right? So we are sitting at October 2024. At 2021, we were sitting at 224, right? And currently we are sitting at close to 1764. Right? So that's almost an 8 to 9 times jump, right? And still what we have here, we have a market cap which is lower than what the order book of the company is. So order book of the company is sitting at 25,000 crore. For Cochin Shipyard, the market valuation is around 41,000 crore, but the order book of the company is sitting at 22,000 crore. So the order book for Garden Reach Shipbuilders is higher than Cochin Shipyard, in spite of the valuation of Cochin Shipyard being higher than Garden Reach Shipbuilders. And Mazagaon Dock Shipbuilders, the valuation is at 91,000 crore, but the order book is at around 40,000 crore. Now, this order book is in no terms the be all and end all. It is not going to end here. In fact, it is going to triple and quadruple in the coming times, because the Defense Acquisition Council has made a lot of announcements. It has made announcement in terms of new aircraft carriers, new submarines, and new frigates. And all three of this in part do a lot of this. So Garden Reach Shipbuilders is also getting into commercial shipbuilding. It is in talks with Scandinavian countries to materialize order book for Scandinavian countries, and this will increase the order book. So what we are talking about is we are going to see a massive uprise in the order book, and it'll be interesting to see whether the market cap keeps pace with the order book. And order book, as we know, is not a sole criteria of picking a stock. I do understand that. But the order book gives revenue visibility. It gives visibility in terms of what the revenue is going to be for the foreseeable future, right? What the management has guided for Garden Reach Shipbuilders, and a disclaimer that I've been holding Garden Reach Shipbuilders since some time, and I still hold Garden Reach Shipbuilders, and I've been tracking Garden Reach more closely than what I've been tracking Mazagaon Dock and Cochin Shipyard. But I wanted to bring the peer comparison in because I didn't want to be having that anchoring effect that, yeah, this is what I have and this is superior. The prime reason why I went into Garden Reach Shipbuilders, even at that point when I did go in 2023, it was that at that time, Garden Reach Shipbuilders revenue to order book multiple was the highest. Sorry, order book to revenue multiple was the highest. So the order book at that point in time was sitting at close to 27,000 crore, and the company was doing a revenue of close to 1,900 crore. And what the management has guided is that the management has guided that by 2026, by 2027, the order book is slotted to increase substantially to 3,500 crore and then touching to 4,000 crore from the 1,900 crore where it stood. So there is going to be a doubling effect on the revenue in a short span of 2 to 3 years, and obviously the order book visibility is there. So um, out of the compare after comparing everything, the sole reason why I went into garden reach shipbuilders, and I did not get into that deep in analysis, into really going very deep, because I felt it was kind of a no brainer at that point in time that the revenue order book to revenue multiple was the best, right? And Garden Shipbuilders in itself is involved in submarine frigates and manufacturing of commercial ships and repair and overhaul facility. Now there's a catch here as well. So the repair and overhaul facilities that these shipbuilding companies run, the margins for them are the highest, right? So the shipbuilding part has seen a huge deterioration in margin because of increase in raw material prices, and the percentage of repair and overall currently within all the three is lower, is lower compared to obviously the shipbuilding part. But this in itself is constantly going to keep increasing as India begins to produce more of its ships. If it is producing more of its ships and it is selling more of its ships, what will slowly start happening is they'll start signing a contract that this is the ship that we are selling you. So hence the repair and overall also we'll do. So once the ship is on board, it is there for 30 to 40 years of serviceable career. It'll keep coming back to that company for repair and overhaul, and that provides an annuity like cash flow visibility for these three companies. So if you look at the current price for Garden Reach is currently 1765. Mazagaon Dock is 4,526, and Cochin Shipyard is 1564. Now, price in isolation does not tell a lot of things, but price in terms of earnings. So that is what we will look at. So price in terms of earnings, Garden Reach is sitting at somewhere close to 55, and Mazagaon Dock is sitting close to 40, and Cochin Shipyard is sitting close to 46.5. So the market has given them a good price to earning multiple, right? So it has pushed it up. But the question is, will the growth continue, and will the earnings continue to keep pace with the price? In my opinion, and this is not a stock recommendation, please do your own research while investing. I feel that the earnings will keep pace, and the earning will keep going because there's kind of a moat. The only client that customer base that these three have are the defense companies, right? So so in spite of there being a delay, and so delay does have so the tendering process is such that the delay does incur some cost. But even then, the client is fixed, the order book is fixed, and the order book is constantly going to keep increasing. So it's a good kind of a moat for the company. So in terms of them making supernormal profits and continue to make supernormal profits, I see that happening with these companies, because even if um, even if suppose a commercial player comes, right, um, they will take time to set up, right? And shipbuilding, and we know about a private player who did try this, Mr. Anil Ambani, and we know how grandly he failed. But I've always felt that that business, when he did go into, was a right business at the wrong time. Now this time, if any of the private players do enter into something like this, they have a significant advantage in terms of acquiring a company and then getting into defense manufacturing. So Adani, as we know, is getting into defense manufacturing. Bharat Forge is getting into defense manufacturing big time. So defense manufacturing is going to be a theme which is going to stay, and it's just it'll be interesting to watch out how these companies then continue to progress from here. In terms of the dividend yield, obviously the primary objective of these companies is to constantly plow back profit and enter into newer and newer projects. So They constantly keep signing these projects of creating destroyers or submarines. So a lot of profit is plowed back into these companies, and hence the dividend yield is not that high. Naturally so, but that doesn't mean that the stock is bad, right? Because um, dividend yield is one thing, but capital appreciation is also very, very important. So that is something that shareholders, as an investor, need to watch out for. In terms of the ROC and ROE, we see that Mazagaon Dock has the highest return on capital employed and return on equity, sitting at close to 44.2 and 35.2, and Cochin Shipyard sitting at close to 21.6, 17.2, and Garni Shipbuilder. So all of them have. So Mazagaon Dock has great capital return on capital equity and return on equity numbers, but all of them have very decent and more higher than decent return on capital equity and return on equity employed ratios and percentages. In terms of the profit after tax, so Mazagaon Dock is doing a profit of close to 2,319 crore. Garden Reach is doing a profit of 368 crores. And when I did enter Garden Reach, I remember the profits were not that high. The profits were sitting at close to, so as at March of 2022 is when I entered, right? 1,700 crore. This number is stuck with me. Yes, it was not March of 2023, March of 2022. So 1754 crore is what this number was, and the management had guided at 3,500 crore. And when I do revisit now, I see that that number has been achieved, right? And from here on, the management is guiding further upside. So we are seeing that trailing 12 month is also in the upward trajectory, and it is hitting at 4,000 crore, and the profitability in terms of where it is sitting at that point in time in March of 2022, it was at close to 190. So in terms of NPM percentage, it is close to a 10%, right? But this is, again, it's sitting at 10% only, but it's, since the revenue and the volumes are rising, the net profit is rising as well. So and the net profit currently sitting at close to 368 in terms of the trailing 12 month net profits, right? So if you look at the FII holdings, and we look at uh, which companies are the FIIs more excited by. So the FII holdings have been higher for Cochin Shipyard, which is 3.84%. For Garden Reach, also 3.65. And there's a marquee investor invested in Garden Reach Shipbuilders, which is Mr. Ramesh Damani. So if I quickly go to Garden Reach Shipbuilders and I show the public part. So Mr. Ramesh Damani has been holding the stock, and he has been holding it 1.09%. It's a very long time. And interestingly, in September 2024, maybe it's not updated, I'm not sure, or he's gone below 1% and he's decided to take some stake out of this and reallocate. So his money, his choices. So in terms of FII holdings, this is what we saw. Promoter holdings. So if you look at who the promoters are, would be the President of India for Garden Reach. And if you look at the promoter for, again, the President of India, so all government-backed defense shipbuilding company and the President of India. So all three of them, the promoters is the government, right? And hence the mention of the President of India, and all of them have a stake of close to 70 to 80% holding. In terms of pledge percentage, zero, because they have not utilized their shares to as a collateral to take loans for the expansion purposes. So that's great. So if you look at the cash equivalents that the company hold, right? So they hold, Mazagaon Dock holds close to 14,210 crore, right? It is sitting at a market cap of 90,000 crore and holding a cash equivalence of 14,210 crore. But a lot of times what happens is these cash equivalents are sitting as a source of working capital. So these movements happen rapidly, right? A lot of cash is required to build a ship, obviously, and these cash is sitting in the bank. It's earning a interest rate, or whether it's invested in a liquid fund or whatever it is. But these are then utilized very quickly to for shipbuilding purposes. Hence, you require a bit of cash on your books to be able to service and undertake these big projects. The free cash flow averages, Garden Reach has a free cash flow of close to 242 crore, which is almost equivalent to the net profit a year ago, and hence Mazagaon Dock Shipbuilders 1546 and Cochin Shipyard 2132. In terms of debt to equity, a Mazagaon Shipbuilder stock doesn't have any debt on its book, and Cochin Shipyard has zero point 0.1, so minuscule debt on sitting on his book, and 0.04. So these debt would be to fund the shipbuilding activities that there is. So if you look at the profit and loss statement, right? So in terms of the sales numbers and where they stand. So as I mentioned, that Garden Reach is already hitting close to 3,500 crore, and Cochin Shipyard is in the same range, so it's 3,645 crore, and Mazagaon Dock is at 9,467 crore. But interestingly, what gets interesting from here is that the operating profit margin is the lowest for Garden Reach, it's close to 7%, and for Mazagaon Dock is 15, and for Cochin Shipyard is the highest, sitting at 24%, right? And in terms of profit before tax, so we'll look at profit after tax directly. So in terms of net profit after tax, Garden Reach is sitting close to 357 crore. Mazagaon Dock at a huge 1937 crore. So the huge gap between Mazagaon Dock and Garden Reach. So Cochin Shipyard is sitting at close to 813 crore. So Cochin Shipyard has better margins compared to what Garden Reach has. But it'll be interesting to see. But the difference is that the order book to revenue multiple is much better for Garden Reach. So it'll be interesting to see how the fresh order book is then allocated between these three, and which of them get a major pie from the immense defense activity, defense shipbuilding activity that is going to be happening later on, right? So that'll be interesting to see. So I close my analysis here. Please do let me know within the comment section what you think of the analysis. Any other peer comparisons that you want me to do, any company that you want me to analyze more in detail, and I would be happy to do that. Thank you and have a lovely day ahead.